Most people talk about what you should be doing as a first-time buyer when buying a property. What they don't talk about is what you should not be doing. So in this video, we are talking about 15 things that you should not be doing when buying your property. To talk about this, I have Iftika with me. Hello, Ifti.
Hi, Vidal. How are you doing?
I'm really good. How are you?
Yeah, very well, thanks.
So in our last video, we met in Gaul and now we're in Colombo. So how is it treating you?
Yeah, Colombo is different to Gaul. Gaul, you got the lovely beaches, but Colombo's got something else to offer. Beautiful places to eat. I love my food, so Colombo is a nice place. There's a lot of street food out here. And of course, this architecture, right? So this is something that you find in Colombo. Places like this is kind of a hideout, but it's a lovely treasure. I like this place, but likewise there's so many good places in Colombo, so it's a totally different experience and lovely place for shopping too.
Definitely, Ifti. So we have 15 points with us, and my first point is, it says don't make an offer without checking affordability. Why is this important?
Yeah, that's a mistake that a lot of people do. A lot of people go and make a mortgage offer not knowing whether they can afford it. They come and tell me, one of my friends got a mortgage, he's similar to me, so if he can buy a property for say 300,000, I can afford it as well, right? So that's a mistake. But each person's circumstances can be slightly different. You might have a car loan, you might have some other financial commitment, but you need to look at that. So I'd say go one step further. Don't just stop with just checking your affordability. Get a decision in principle, because when you have a decision in principle, you actually know that you can afford that mortgage, provided you've given the honest answers. So I think that will probably be a good thing for you to do before making any offers.
So my second point is, don't borrow money for your deposit. Does this include borrowing money from lenders and family members as well?
Yeah, that's a good one. A lot of people make this mistake. They think, I need a deposit for the house. Let me go and borrow some money. Lenders don't look at this favorably. Not all lenders. There might be one or two who might be okay, but most of them don't look at it favorably. Family is a different matter. I mean, banks don't like you borrowing money anyway. So even if you're borrowing money from families, it's considered as a commitment because you're supposed to pay it back. But if you get something like a gift from the family, it's a different story altogether.
My third point is, don't go for credit commitments before applying. Can you explain this?
Okay, that's a very good one. Some people borrow money and they say, this can be used as a deposit. So that's something that you definitely want to avoid. So avoid some of these credit commitments. Some people, rack up credit card balances thinking that they can save money as their deposit. So those are not things that banks like to see. So therefore you have to be very careful with this. So the best thing to do is not to borrow anything extra, because if you get a decision in principle today and you go and rack up debt somewhere else, it can be a problem. So stay away from that. Things like, buying a new car on hire purchase is not good. Getting credit card balances up, that's not good. Getting personal loans, that's not good. And things like payday loans, please avoid, right? Because that's going to cause massive problems.
Yes, exactly. My fourth point is, don't run unnecessary credit checks. So let's say the first-time buyer is to run a credit check. Does this affect their credit score?
Okay, a very good question. Fairly misunderstood as well. So sometimes people run credit searches or a credit check. If you run a credit check with a credit reference agency, that's fine, but you have to run it. You cannot get a bank or somebody else to run a credit search on your behalf because it could affect your credit score. Normally what we would do is we will tell people, obviously we want to see how much they can afford. Let's run a credit search. Now we will run it with a lender who does a soft credit search. So if you do that, you don't have a problem because it doesn't affect your credit score and it doesn't affect your mortgage application effectively. So if you do that, you're fine. But the only problem you have is sometimes people, they run few decisions in principles, right? So few credit searches have been done because 3 soft credit searches can lead to a hard credit search. So if you're kind of in the borderline with your credit scores, it may affect you. And be careful about running credit searches with lenders who do hard credit searches. Sometimes you don't have a choice. If you're making a mortgage application and if that lender only does a hard credit search, you don't have a choice. But as much as possible at early stages, avoid running too many credit searches.
So moving on to my fifth point, don't go for the cheapest deal. So if say, as mortgage brokers, we give our clients the most suitable deal for them. So this deal might not be the cheapest deal in the market. Can you explain why we do this?
Yeah, when you say cheapest deal, it sounds very controversial, right? And I think you kind of qualified that by saying the most suitable. I think that's the best answer. Because a lot of people, what they do is they look at the interest rate. So X bank is offering, let's say 5% and Y bank is offering 4.79%. They will go to Y bank saying that I want that deal. So that's what they'll be after. But X bank, actually, even though they are 5%, they may be cheaper because they might not charge you a valuation fee. Their product fee might be lower and their exit fees and things like that might be lower, but that might work cheaper. Also, the more cheaper one might not work for you because a lot of people go to price comparison sites and they look at a deal and say, oh, that's good, right? But that might not work for you. But you might run an application and that might be a hard credit search and that can affect your mortgage. So you probably want to avoid things like that.
Yeah, okay, thank you, Steve. My sixth point is, don't exchange until you're sure.
Oh, yeah.
So why is this rule there?
Okay, so you got to be very careful with exchange. We call it point of no return.
Yeah.
That's exchange, right? So if you're happy, if solicitors are happy with all the legal work, they're comfortable with the title, they're comfortable with all the setup, they'll say, shall we exchange? So when you exchange, you have to give 10% as a deposit, usually, unless your deposit is smaller. If somebody has a 5% deposit, you can give a 5% deposit. But what happens is, once you exchange, if you change your mind, you will lose that deposit that you make, right? And you are liable for any damages that they are claiming as well. So if there's a chain involved, somebody else down the chain is also claiming damages, you are liable for that because everybody thinks you're going to move now. And they'll start booking their, people for the movers and various other things as well. They'll start doing all that, right? So all those costs can come to you, plus you losing your 10%, right? So be very careful. You have to be very, very sure that you can complete if you're exchanging.
Okay. So moving to my seventh point, don't ignore special conditions in the mortgage offer. So once the mortgage offer is out, why is it so important to read this mortgage offer?
Yeah, it's very important. Usually lenders put something called special conditions, not for everybody, but for some people. It can be as small as, I had a client once, he had a credit card balance of £40, I think, right? It's not massive in the grand scheme of things for him, but he forgot to pay that, right? So last minute, the solicitor said, okay, can you just, because it's a condition in your offer, can you please pay that off and can you please give me a proof of payment, right? So it was a panic for that £40 because the bank was quite strict. They wanted that condition, right? So with those, you have to be extremely careful. You got to read the conditions because you might go to the point of exchange or completion and then realize, oh my God, I need to do this, right? So don't forget that. You have to read the special conditions. Just because you have a mortgage offer doesn't guarantee that everything is okay.
Yeah.
You have to read that point.
Okay. Before we move on to the next point, I would like to remind every one of you that we are on your favorite social media platforms, Facebook, Instagram, LinkedIn, and TikTok. So if you have been liking this video so far, hit that like button, subscribe to our YouTube channel, and click on that notification bell to be notified whenever we post a new video. So if say our next point is, don't go for the cheapest solicitor. So in one of our previous videos, we talked about their involvement in the mortgage process.
Yeah, a lot of people complain about solicitors. Now, they say cheap is not always good, right? It's not always the case, but most of the time what we find is a lot of this work is done by a conveyancer. So if you get conveyancers, there are cheap conveyancers out there who work on volumes. So they have a large number of clients. Obviously, you're one of them, right?
Yeah.
So the complaints I usually get is clients come and tell me that, look, solicitor's not answering the phone, right? They're taking forever to reply to my emails. So what I'm saying is, go with some references, speak to your mortgage broker, someone like us, or speak to your friends who've used a solicitor before. Just go with positive references, because that can make a big difference. Because if you choose the wrong solicitor and if there's a lot of delays, it can delay your process. You might even lose your house, right? Because you put in a lot of effort, you may lose the house. So you don't want to lose house because you chose a bad solicitor. I've had cases where clients have stayed for 5 months before they completed, right? So that's kind of, unless it's complicated, it shouldn't take that long. So go with references, go with the solicitors who are good. I always tell my clients, don't worry about paying that £100 extra if you're getting the good solicitor, because that can make a massive difference. Remember, you might be buying a 500,000 property. Solicitor's job is very, very important, because they have to look at the documents properly, because that has to happen properly. So don't compromise on that. That's my advice.
So if say my point 9 is, don't forget to instruct searches after the application. Care to explain this?
Okay. Yeah, searchers, the solicitors have a choice. So they can either wait for the offer to come and then start the searches, or they can start the searches upfront. So some people opt to wait till the offer comes out. I mean, if you're in a rush, don't do that, right? Because obviously, the offer might come out in 4 weeks, 6 weeks, depending on the bank. So if you start searches 6 weeks down the line, this process is going to take longer. So therefore, my advice is, if you're sure that you want to buy the house, just instruct the searches. There's a bit of a risk here because searches cost money. You may lose, but that's a risk you're taking anyway when you buy a house, right? So if you're in a rush to move to the property and you don't like delays, don't delay your searches. Just do it right away.
Definitely. So if my 10th point is, don't borrow any money after the offer is issued or while your application is in progress. Why is this?
It's quite important. A lot of people say, I got my mortgage offer, I can do what I want. That's not true. Because banks, until the point they release funds, that is just before completion, that they usually release funds for completion on the day. They do background searches. So they will run soft credit searches on you. So if you borrow more money, that comes as a commitment. So you don't think bank does that, but bank does that, right? So you need to make sure that you don't do that, especially if you're in the borderline. So if you're sort of borrowing maximum, it could cause problems. But even if not, you don't know what searches the banks have done in the background. So you have to be extremely careful. So you probably want to stay away from any debt during that time.
Okay. So my 11th point is, don't forget to instruct a survey. Why is this survey so important?
Right. A lot of the time, estate agents say, have you instructed a valuation, right? So the valuation's usually instructed by the bank, right? So when you say apply for a mortgage through X bank will do a valuation. That's generally a basic valuation that's done. But on top of that, you have a choice to do a survey. Now, survey looks at your property in detail, right? This is probably the largest asset you're going to buy, right? So if you're going to be doing that, you probably want to do a survey, because especially if your house is old or it's expensive, you probably want to do a survey, because there might be a small crack on the wall. You don't know, but that might be a structural movement which can cause problems, right? So because the bank may not spot it, but a detailed survey might. So again, it's something discretionary, but I think for most people, it's a must that you do a survey, because that might point out a lot of things that you and I can't figure out.
Yeah. Okay. So if my 12th point is, don't avoid mortgage protection, or also known as insurance. Most people tend to avoid this, saying that it's just a marketing scheme or a sales scheme. Why is it so important for them to go for protection?
Yeah. Quite often I hear when people get a mortgage offer, they go, yay, right? But then they forget everything else because they plan their move into the house, right? That's what they do. But insurance is very, very important. It's not a marketing thing. One type of insurance is home insurance. Now that is compulsory with most lenders on your mortgage offer. It's one of those special conditions. They'll say that you need to have it. But sometimes people forget or they avoid it, right? Please don't do that. It's a special condition. Just in case your house burns down, you are liable to pay your mortgage still, right? So the insurance will help you recover that cost. So don't avoid that. The second type of insurance is to do with personal, right? It could be life and it could be income protection. There are things like critical illness insurance. There are few areas that insurance covers. Important to have life insurance, especially if it's a family, let's say husband and wife. Let's say the husband is sort of the sole breadwinner of the family. If something happens to him, somebody's got to protect the house, right? So because your wife and kids might be on the road in case they can't pay the mortgage, right? Because they are still liable to pay that debt. So that's life insurance that covers that. But when it comes to income protection, it's slightly different. So let's say you broke your leg and you can't go to work, or you have a very bad back and you can't work. Income protection will pay off your mortgage, right? So even though you're still alive, thank God, but you can't really work, the insurance pays that off. So those are policies you might want to consider. And there are other policies like critical illness. That is, if you get a critical illness, something like a cancer and you can't work, or you get a heart attack or a stroke and you can't work, insurance helps you. So don't avoid these, because these are there for a reason. I mean, we've seen the worst happen, but this is something that everybody wants to try and avoid.
So my next point is, don't forget that your parents can also support your mortgage.
I mean, that's a very good point. Parents can support in many ways. Either they can donate money, like give it as a gift. So you can use that money towards your deposit. And there's another scheme called joint borrower sole proprietor. Now that's not offered by all banks, but that's an option for you as well. So if you want a mortgage and let's say you're falling short, maybe you can get your parent to join in your mortgage, right? And then you can apply for the mortgage jointly with them. So that will help you with the mortgage. So that's something a lot of people don't know, because they think in the past there was something called a guarantor scheme where the parents can guarantee. Most banks have kind of done away with that now. And this is the new scheme that's out there, which some banks have implemented. So it's something that you can potentially use. So the joint borrower sole proprietor scheme is very, very undersold. A lot of people don't even know about it, but it's a very good scheme for people to get on that property ladder. So don't forget that there are schemes like that out there.
Okay, so if they move into my next point, don't forget there are free mortgage brokers.
Yeah, a lot of people don't know that there is something called free brokers, right? Obviously, the brokers get paid by the bank, so it's their discretion whether they want to charge a fee on top or not. A lot of the first-time buyers don't know this. Sometimes they just go and pay £700, £300, depending on what the broker charges, right? But companies like us, we don't charge a broker fee. We get paid from the bank and we accept that as our fee. We don't charge anything from the clients. But there are a lot of brokers. Doesn't mean they're bad. Obviously companies like us, we have so many 5-star reviews. Likewise, there are the brokers out there as well who has got good reviews and do not charge a fee. So that might be an option. That saving you might be able to use for something else, because quite often I find that first-time buyers are always pushed.
Yeah. So if my 15th and my last point is, don't be afraid to take advice and don't be intimidated by the process, because as a first-time buyer, you don't know what's going on, even though you have an idea about the process. So first-time buyers tend to be intimidated by this a lot. So what's your take on that?
Yeah, I mean, buying a house can be daunting, especially if you don't have experience. But even if you do have experience, it can be daunting. So you always need a helping hand and somebody to guide you through and to hold your hand. That's what you actually need, right? There are a lot of brokers out there who go out of the way to do this, especially with the first-time buyers. We see this quite often because they really don't know most of the things that you do. Some of these points we covered, a lot of the first-time buyers would not know. So if you get a good broker who can help you, or an advisor who can help you and guide you through this process, it will definitely be helpful. So you don't have to be worried about these things. There are people out there who will assist you for sure. It could be a family member as well, but quite often brokers are quite close to this sort of area. So they may know a little bit more than your family members do.
If you haven't seen our video on how solicitors are involved in this mortgage process, you can click right here and watch that video. My dear first-time buyers, don't do the above mentioned 15 points if you want this process to be much smoother. If you're a first-time buyer who's afraid to take your first steps in buying your first property, don't worry to contact us. We are always there to help you. Thank you everyone for watching this video, and I hope this was helpful, and most importantly, thank you so much Ifti for joining with us today.
Thank you. Thanks for having me, Zara.
It was a great pleasure. If you have been liking this video so far, don't forget to hit that like button, subscribe to our YouTube channel and hit on the notification bell to be notified whenever we post a new video.